Good morning, everybody. Here's the camera. Good morning and happy Thursday. We are, I think, more or less on plan here. We'll start in another minute or so. Just checking on a couple more things, and then we are going to go through. We've got a couple of important things to look at today on the notepad. So we'll do that here in just a second. It's also Ticker Thursday, so if you guys have any tickers you want to have us take a look at, we will do that as well. So just making one more little note here. And thank you for the audio and visual test as always. Much appreciated. Excellent. Okay, let's get started. It's right on time, 2 minutes past the top of the hour. Serge Berger here from thestudytrader.com. We're live as usual Monday through Thursday. Today is June the 5th. Thank you all for being here. If you are here for the first time, welcome. What we're going to do is take the next 15 minutes or so and going through some of the top things on my notepad here for today. And if you could, please make sure you subscribe to the channel and you give us a thumbs up like on the video. That helps us to be able to continue to do this show. It very importantly allows you to receive real-time alerts when we go live with analysis here on the channel. Obviously, it doesn't cost you anything, but that is that. Let me just check one more thing here. Audio seems to be good. I'm not getting any complaints. Mark, maybe turn it up on your end. Would be my suggestion. I don't have any other issues unless someone else has an audio problem as well, but it looks to me like we are good here. Let me just check one more thing. No, I think everything's good. So, all right, let's get started. So, what's going on? I do need to look at commodities again this morning, and we were seeing a big move in silver. If you guys are following me on the shorts, YouTube shorts, then you have been seeing our sort of long bullish thoughts on silver. I just did another one this morning. Go check that out in YouTube Shorts. It's inside your YouTube here. Just click on Shorts, and there's a live video update for me from this morning. So we'll look at that. Platinum's breaking out. Oil and natural gas might be next. The dollar looks like absolute shit. Excuse my language. Then I want to talk about tomorrow and what we could see from the jobs report. And then it's Ticker Thursdays. So that means that we're going to take some individual stock tickers. So let's go. All right. Let's start off with where we are in terms of performance charts, and then we'll start with stocks and then go through the commodity stuff that we mentioned before. By the way, all the stuff about commodities that I'm going to talk about, it's all tradable through ETFs, right? Or even if you really want to, single name stocks, certainly options, and of course futures. So this is just a quick reminder of where we're at. What we're looking at here is still, dramatic outperformance year to date by almost everything versus the S&P 500 and the NASDAQ, which are continuing to lag. What I want to point out here is silver. That is having, again, another meaningful up morning so far today, up 3.3% this morning for silver. I'll show you that chart in a minute. And what I'm trying to show you is the year-to-date performance of things. So the year-to-date performance of silver, and this up 19% here, doesn't actually yet take into account this morning's move. So it's probably up about 22%, which is actually closer to how uranium is doing so far this year. So very, very strong moves there. Again, while everyone is still, chart chasing NVIDIA and a bunch of other Max 7 stocks, the real moves are happening pretty much anywhere else but there, right? So just keep that in mind. I realize it's not yet the popular way to look at things because the media hasn't yet covered it, but here we are. So that's what's going on there. Now, let's quickly just look at the equity indices before we start getting into the real juicy stuff. The equity markets are pretty flat. We just had a headline that Trump and Xi apparently spoke earlier today, I think is what the headline was. But the S&P 500 continues to be on this slow grind higher. We've mentioned it now for the past, I'm going to say almost 2 weeks, that we cannot rule out fresh all-time highs. The question really is what happens thereafter. We're at a pretty critical point here in many ways. Tomorrow's jobs report I don't think is not important. I think now that the tariff news is no longer as headline grabbing as it was in April and parts of May, I think now we're going to start focusing more on the economic data again. The jobs report, you saw that yesterday. Yesterday we had a very weak ADP jobs report, which no one pays attention to. I mentioned it here yesterday, but it was very weak. I think only 34,000 jobs were created versus like an estimate of like 130 or something like that. So it was that weak that people actually paid attention to it. Tomorrow's jobs report, we'll see how the market reacts. Remember, it's not so much what is the number because it's lagging data. It's how does the market want to react to that data. That's important. So for that perspective, look, I see the bull flags. I see all the technical stuff, and I don't disagree that this could lead to a further squeeze. However, I also need to caution that we're always, and this is always the case, not just now, one crappy data point away from a really nasty outside bearish day reversal. Again, that hasn't happened, and it may not happen, but I just want to kind of make sure everyone understands that is still taking place. There's still a possibility. Just quickly make a note here. Saw something come in here. Okay, so that's where we are on stocks. Whether it's the SPY, whether it's the Nasdaq 100. Again, we've talked about these bull flags. They're happening. The Nasdaq 100 yesterday up another 30 basis points. The day before was up almost 80 basis points. So things are moving in the right direction. But again, the focal point of the market is now slowly shifting away from tariffs. We saw that perfectly, I think yesterday or 2 days ago, where the White House basically, or Trump said specifically that it's tough to negotiate with Xi, and the market actually went up on that. If that was in April, the market would have dropped 5%. And likewise this morning, just now, you just saw the headline, Trump and Xi spoke apparently is the headline. All I watch is a headline, and yes, markets popped a little bit, but like if that would have been a headline in April, the market would be up 5%, so or at least a few percent. So, again, the tariff stuff to me, it sounds like the market's a little bit sort of indifferent to it right now until maybe it comes back into focus. So that's why the economic data points, such as yesterday's ADP and certainly tomorrow's jobs report, are more important once again. So that's maybe an important thing to keep in mind. Then you look at the equity market just outside of just the S&P, and again, these bull flag patterns that are very popular right now because they are there, right? They are everywhere, whether it's medical devices, ETFs like IHI, whether it's the S&P, the NASDAQ, HACK, the Hack ETF. We talked about those cybersecurity stocks. They broke out of that pattern a little while ago. So they're there, and I do not want to disrespect that. I just am now mindful that tomorrow's jobs report is something that, from a beta perspective, to me is now once again important. So what I'm looking to do here is looking for something that has less beta risk. What is beta risk? Beta is basically like the broader S&P 500 risk, the broader stock market risk, right? So, and what I'm seeing is that the dollar is an absolute, excuse my technical term here, absolute turd here, right? Look at this. This is the dollar index. It's looking like it just wants to completely, fall apart or just go lower. Look, it's not the end of the dollar. It'll bounce back again at some point, but right now it's just not looking good. And the reason why this is important is because this is one of the reasons, not the only reason, but one reason why the commodity space, silver, the precious metals, and I'll show you all those, and even now natural gas and oil are starting to act a hell of a lot better. So the dollar needs to get back on its feet if there's if there's any chance for the commodity rally to kind of really stall in a meaningful way. So this is important. Remember, if you're a dollar-based investor, like I am, this is not actually good news, right? It's not good news because it's basically, you know, getting rid of our purchasing power, so or decreasing it. So that's not fun. That's why we have to own assets that do well when the dollar goes down. And one of the things that does well when the dollar goes down is commodities. Now, not all commodities, and it's not as easy as just saying that you know, dollar down, commodities up. But broadly speaking, it is looking better. So let me show you the big moves. I mean, we've talked about gold, you know, to no end. So this is hold on. Let's start with gold. Let's just take this one thing out of it. So gold continues to act well. This is the price of gold. We remain bullish gold on the market rover. For those of you guys using the market rover, which I'll bring up here in just a second, remains very, very bullish from a trending perspective. So here is the market rover. Let me quickly show you that. So this is gold in the market rover. It's been bullish. It's been, you know, if all you did is buy gold back when it went bullish in the market rover in January of last year, you know, that position is now up 67%. That's gold. It's not a tech stock. That's freaking gold, right? Silver miners are all looking way, way better from a trending perspective as well on the market rover. That's very, very important to us. That's the primary consideration we have for being long or short something, is the trend. And then, of course, there's momentum shorter term. So that's what's going on in gold. We've talked about, have you guys heard me talk about silver at all? Does anyone remember me talking about silver by any chance over the past few months? Does that ring a bell to anyone that I talked about silver? Silver this morning is up 4%, and it's staging a major breakout. Now, you know, what to do here? Well, silver, and again, this is volatile. So let me just please remind everyone that silver is a volatile thing. It's a huge pain in the ass to trade, but when it does move, it can move in a big way. So here is silver, and today is the breakout day. Will it last? I don't know. How high would it go? Listen, at this point, you know, if it keeps moving at this clip, it'll be at, you know, 38, 40 bucks before long. I realize most people are not long silver because most people prefer getting long some Yahoo tech stock that CNBC talks about every 5 minutes. But the reality is a lot of that stuff hasn't moved to new highs. Silver has, right? So we like to look at things where the money is flowing, and the money is not flowing into high-flying tech stocks as much as it is into other parts of the market. And this here is one thing it's moving to. Again, I just want to once again make sure everyone knows this thing is volatile. It's not for the faint of heart, but neither are tech stocks, by the way, right? So just kind of keep that in mind. But I do think this is a really impressive move. Even just right now, literally, I'm watching silver right now. Let me quickly show you guys this for those people that are using our Vertical X Pro indicator. So let me quickly clean things up here so you can see this a bit better. So this is literally a live chart right now of silver futures, and you can see it's literally getting bought. Like every little dip gets bought. So we had a momentum trading signal this morning in silver at early morning, at like middle of the night basically, and then it started going vertical. And then the Vertical X Pro kept warning us, be careful, it's getting overbought, getting overbought, getting overbought, and it finally did get overbought when the arrow stopped printing, and now it's consolidating and maybe goes higher again. So that's how I've been watching silver. I was not up at 1 in the morning. I was just long. I've been long silver futures for a couple of weeks now. I remain long. I don't see any reason to close it right now. Again, you know, silver futures is just one way of doing it. One can be long SLV, the ETF, of course. It's the same exact idea. But SLV this morning is going to break out, right? So because obviously SLV is not the underlying. What the underlying is silver, the price of silver. So silver is moving higher, and the SLV ETF is going to have quite the move here. How high does it go? Again, I think at this point we have to use a trend following approach. For those of you guys using momentum, you know that we sent out a real-time trade alert on silver early this week on the breakout. The silver futures let me show you here. The trade continues. So basically the buy signal that we got, the momentum buy signal that we received from the TST trend and momentum indicator took place on Tuesday of last week. And so far silver since then is up about 8.5%. So, obviously with my futures positions, that's a lot more because that's levered, or if one is long calls or on something like this, that's very impressive as well. So that's what's going on in silver, but that's not the only one. Let's talk about some other commodities that are doing good things right now. And that is, for example, oil is at a point where it, quite frankly, it really could start making a move. Oil, it's not yet. It hasn't made a move yet, but I think if oil gets above, 65 or so, maybe it starts gaining momentum. And then to me, more interesting than that is natural gas. The UNG ETF is, to me, is very interesting to own. Natural gas had a bit of a move earlier, and it looks like oil to no great surprise. But UNG is natural gas. This is the ETF. It's been in consolidation mode. Again, it's volatile, but I think if UNG can get its act together and break sort of into the 18s, maybe 18, 15 or higher, we could start to see some acceleration there. So that is what we are seeing. Last but not least, before we do Ticker Thursday, so if you guys have a ticker you want us to look at, please type it in so we can analyze it for you. So that would be the time right now. What I do want to show you, though, at the same time here is what's going on in yields. So, we still have this idea that ultimately 2-year yields are going to go lower, probably well below, 3%. And that's predicated upon one of the most popular hedge fund trades that take place, all the time. And it's basically when you either go into an economic slowdown or come out of an economic slowdown. I'll just show it to you like this. Yields end up going materially in one direction or another. So for example, here you can see as we started getting into 2019, bond yields started to go down. So that was a time to buy bonds or buy bond futures or buy call options on TLT or SHY, right? That kind of thing. Yield down, price up. At the same time, when we see us coming out of economic recessions or slowdowns and bond yields go higher, that means it's time to basically short bonds because bond yields go up. And now we're once again in a situation that I think is more like us going into an economic slowdown at some point. We're not there yet. The U.S. Consumer still has their jobs. But at some point, just because these are cycles that we're looking at here, at some point, it is likely that bond yields are going to go down. I'm not there yet, but I think at the latest, if I see the 2-year yield break below 3.5%, I would probably go long the bond market on the short end. So that would be long SHY, long call options on SHY, certainly long 2-year futures, which is what I'm going to do. Any levered way of doing that would be my preferred way, because I think then bond yields probably go towards about 2.5%. I don't see us having one of these moves. I don't think yields are going to go much below 2%. I'd be surprised if that happens, but it could still be a big move that could really be a moneymaker. So again, we're not there yet. I don't have a position on it right now. I tried it a couple of weeks ago, got stopped out. That's the world, the world that we live in, and that's as a trader how we have to operate, right? Yeah, if there are no questions, no tickers, we'll leave it at this. I think we did, what time is it now? Yeah, we did a nice 15, almost 20 minutes here this morning. So we covered silver, we covered, actually platinum we haven't talked about. I'm sure there's an ETF for platinum, but just so you know, platinum's having a move as well today, up 8% today. So again, these are commodities, right? These are moving ETFs for that. They tend to trend when they do finally trend, and there's a lot of money here to be made if these trending moves are actually real. But I can tell you that platinum, like literally this week or this and the week before, is now breaking out of a 4-year consolidation pattern. So I don't think that's something to ignore. Hope it helps. I'll see you guys back here Monday morning. And if you are a a member, we'll see you guys over in Trade Ops HQ. Trade Ops is our members area. We'll see you guys over there in about 10 minutes. Have a great trading day and a great weekend. Again, please make sure you subscribe to the channel. Please, please, please. It's very important, not only just for us, but also really for you, so you get updated in real time when we go live. And please give us a thumbs up like that allows us to be able to continue to do this show in the morning, give you all the information, educate you, give you trade ideas here, and keep this show running. So thanks for being here. Have a great weekend. And members, I'll see you guys over in Trade Ops HQ in a few minutes. Take care.